Hello traders, you are welcome to this video. In this video, we are going to be discussing a very common concept in the market, right? Swing highs and swing lows. Of course, swing highs and swing lows are a very common concept in the Forex market. Now, what is a swing high? A swing high occurs when the price of a currency pair peaks, right, before reversing direction, something like this. Now, this is a swing high, for example. This is a swing high, right? This is another swing high. A point where the price peaks before reversing direction. It forms when a high is followed by two lower highs on either side. Okay, now we can see that this is a swing high and this is a lower high, right? On either side, we can see that there is a lower high here, 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 right? And then for this swing high, we can see that there is a lower high here and there is a lower high here, just a brief high, went down and came back up. So that is a swing high, right? It indicates a resistance level or a potential turning point. As we can see, there are potential turning points where price is likely to head downward, okay? Now, for swing low, on the other hand, it is the opposite of a swing high, basically, right? It's just the opposite. So, for a swing low, it occurs when the price dips to a low before reversing upward. Before reversing upward, it's defined by a low point surrounded by two higher lows. Surrounded by two higher lows. So we can see this is a swing low. We can see that we have a higher low here, we have a higher low here, right? You can see that we have a higher low, sorry, this is a lower low. So this is also a swing low. We can see that we have a higher low here and we have a higher low here, right? So now, when you want to identify swing highs and lows on the chart, you can look for peaks and valleys, right? Peaks and valleys, peaks and valleys, okay? When observing the price chart, focus on points where the price has moved up, forming peaks, and points where it has moved down, forming valleys. A swing high is typically a sharp peak where the price fails to rise further. So swing highs are relatively easy to find, it's always there on the charts. Always there on the charts, right? Now you can also use lines or candlestick charts. Swing highs and lows are easiest to spot on line charts. Now, but we can just continue with our candlesticks, but you can also, you know, easily spot swing highs on the line chart because literally it's in line form, so it will be easy to identify. However, even in the candlestick chart, you can still easily spot your swing highs and swing lows. Okay. Now, why are swing highs and lows critical for technical analysis? This is because swing highs often mark resistance levels. As we can see, swing highs mark resistance levels, right? They mark levels of potential reversals to the downward side. Okay? Swing lows mark support levels, potential reversals to the upward side. Okay, potential reversals to the upward side. Now, these levels are important for traders because they provide clear signals for potential price reversals or continuations, right? You can see now this particular resistance zone, it later played out here. Okay, later played out there, right? You can see this is also a potential reversal zone. You can see this particular level. See, it got rejected here again. Price got rejected here, 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 right? So these are very, very important levels, right? Swing highs and lows show the market's current momentum. In an uptrend, you will see a series of higher swing lows and higher swing highs, signaling strong buying pressure. In a downtrend, the opposite is true, with lower swing highs and lower swing lows. Let us just look at very practical examples. Now, this is a downtrend, right? We can see that this is a downtrend. We are having highs, we have a lower high, have a lower high, have a lower, okay, this is not exactly lower high. Okay, that means it's kind of ended here. At this point, we had something like a double top. a double top formed here, and this is the resistance zone. Okay, but basically you can see we have a lower low, we have a lower low, we have a lower low, lower low, lower low, right? So this shows that there was bearish momentum. There was bearish momentum. Okay, now in the case of an upward move, we can see a low, we can see a higher low, higher low, higher low, higher low like that, and the same for the highs, higher highs like that, going up, going up, going up. This shows that the bullish momentum was strong. Okay, shows that the bullish momentum was strong. Swing highs and lows can help identify trend reversals. Right, when it gets to a swing high, when price gets to a swing high, there's a tendency that it's about to reverse. Okay, by watching for these changes, traders can enter trades at more favorable prices and avoid staying in trades too long when the trade is about to reverse. Okay, now as for your entry points, if you are trading in the direction of the trend, a swing low in an uptrend can serve as a good entry point. For example, we can see that this is a bullish trend, right? So now this was our first swing low, right? You can see the next swing low. You can enter your buy there. You can take your profit at the next resistance zone, this dynamic resistance. You can take your profit, exit your buy trade around there, set your stop loss below the swing low. You see, the swing lows and highs are also important points for setting stop losses. Yeah, because in a buy trade, in a bullish trend, if you enter a buy trade, you might want to set your stop loss below the previous swing low. For a bearish trend, if you enter a sell, you might want to set your stop loss above the previous swing high. So they also serve as important places for referencing, for important references for setting our stop losses and also take profits. Because when you enter a, for example, let's say we have a um all right, this was a buy trend initially, and then you can see a sell trend started forming here. Now these swing highs and lows levels have formed resistance levels for us, right? You can see now when this sell started, you can see that these levels that was formed by these swing highs and lows can serve as take profit levels for our sell in this sell trend. Can you see? Take profit level that was formed by this swing low, it becomes a take profit level here. This one can also be a take profit level here. So they are very important levels, very, very important on our charts. Okay. Now, these price points are very, 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 very useful, and you always find them on the chart. Literally, always. You always find them on the chart. Okay. So that is it for swing highs and swing lows. I hope you found this video insightful. By incorporating swing highs and swing lows into your technical analysis, you can better time your trades, spot trend reversals, and make informed decisions based on market momentum and price action. This understanding is essential for building a consistent and successful trading strategy. But know that no strategy is foolproof, okay? Profit is not guaranteed. Always use an amount you can afford to lose, okay? And observe proper risk management, right? So I hope you found this video insightful. Kindly like and subscribe for more. Cheers and happy trading.